Hello and welcome, everybody. Happy Friday. Welcome to the end of another week and a special Sectors Made Simple webinar. Today, I want to talk to you all a little bit more about Sectors Made Simple. For a while, and almost for our entire existence, there's been one thing that has been at the center of what we've offered, in addition to information: the matrix. The matrix has been our way of adding something to your tool belt, adding a new resource that will help you to invest simpler. Now, while we've created a lot of material around the matrix and tried to make the matrix the best it can be, there's only so much we can do with the matrix until we say we need something else. Now, for a while, the answer to that "what else do we need" question was other resources, stock screeners from other websites, or other tools that allow us to filter using the matrix information, but we need other groups and other things to make the matrix powerful. Now, today, I'm happy to announce that we have a new project. And this new project is an extremely exciting one for me, and hopefully will be an extremely exciting one for you as well, because it gives us information that no other place offers. Today, we get to talk about why an S&P 500 matrix is the next thing that Sectors Made Simple is working on, and how Sectors Made Simple subscribers get to be a part of the process to create this matrix and turn it into something that everyone can use to help them invest simpler. So, if that sounds interesting to you, hope you're ready, because we have lots to cover as we talk about the introduction of our upcoming project, the S&P 500 Relative Strength Matrix. I'm going to need to find an acronym for that because that is a very long thing to be saying. Anyway, that's the topic for today. We're going to cover what this matrix is and, most importantly, how we can use it. So, quick disclaimer, today is going to be mostly focused on information and a little bit more of the high level stuff, but I will talk about backtesting and I will talk about strategies. So whenever I'm doing that, please remember it is meant for educational purposes. We are looking at how well a strategy has done in the past. That does not guarantee how it will do in the future. So please remember that past results cannot guarantee future performance, and always do your own research prior to making any decisions. Apparently, PowerPoint decided that we don't get the line-by-line thing, so we're going to get it all at once, but we'll make do. The goal for today is to talk about what we do at Sectors Made Simple. And I'm not just talking about the webinars. I'm talking about what tools do we offer. Up until now, it has always been our goal to focus on sectors or on relative strength, and try and see how much we can do with those two different groups. We've talked quite a bit about sectors and going into sector rotation and how sector rotation changes. We've also talked a lot about relative strength and how relative strength can be used. But this goes beyond that. This is not just about a matrix, because the goal is for it to be a lot more than just a matrix. So today I want to cover some of the reasons why this is the project that we have decided to work on, some ways that this project will be able to be used, and also share some information about how Sectors Made Simple subscribers can make their mark to turn this tool into something they would want to use. The best place to start is to go by the S&P 500 Relative Strength Matrix and take that apart word by word. First word, S&P 500. I guess, okay, that's 4 words. But it's the first word. This is probably the most obvious part of the project. This is a group of 500 of the largest companies that are in the US stock market. According to S&P Global, Standard & Poor's Global, the S&P 500 makes up about 80% of the market cap in the US stock market, while the number of companies in it are less than 10%. Talk about top heavy, right? 80, what's that? Oh, hi. Shouldn't you be on vacation right now? What are you doing in the chat? Anyway, good to see you. The S&P 500 is less than 10% of the total market, but is over 80%, or sorry, about 80% of the value of that market. Now, because of that, this is a very important group for us to understand in a very clear detail, because this is not just a single industry. It's not a single sector. It's not the NASDAQ 100. It's 500 companies that make up over 3/4 of the US stock market. And 500 is a small enough group that we can do something with it. Now, one of the easiest ways is by looking at sectors and breaking this S&P 500 down into little building blocks, different groups of companies that share similar things. So when I'm talking about sectors, we're talking about technology, communications, or utilities. Industries gets one level deeper, where we're now talking about regulated utilities. We're talking about thermal coal. We're talking about semiconductors. But if we just wanted to stay simple and try and answer this question, because this is probably one that most investors think about. I only have so much money, and I want to invest it in the best company I can. How do I find the best company? Well, it's a lot easier said than done, because how we compare companies is not a simple question to answer. There are an infinite number of ways to compare two companies against each other. We can use something like fundamental analysis, where we can look at a company's financials and say, this company has better financials than that company. But this isn't perfect. While there are some things like earnings per share growth that is very easy to explain and say this one has better than that one, there are other parts that are a little bit harder, like price to earnings. You could say that a company that has higher price to earnings is worse value. You're spending more for less earnings. But that's not always a bad thing. Sometimes you want to spend a little bit more for better quality. If you go to the store, you're going to get a better quality tool. If you go to the hardware store, you're going to get a better screwdriver than if you went to wish.com. You're going to get a better screwdriver at Home Depot than you would if you went to Toys R Us. They're silly examples, but this applies. You're spending more money, but that doesn't mean you're getting worse value. Or there's something else, beta. How much does a stock's price change compared to the market? If you like to play things a little riskier and you want to see some bigger returns, you might look at something that has a higher beta, something that will change prices faster compared to the market, and say, that's the one for me. Or you can be boring and risk averse like me and want to take the one with a lower beta, something that moves a little slower, but that's not a bad thing. They're different styles. So fundamental analysis might not be the best one for us to look at when we want to compare companies. It's subjective, and also it's very hard to turn fundamentals into actual prices. You don't make money off of price to earnings. You make money off of the stock's price going up and down. That's what we want to focus on. So to do that, we can look at price performance or technical analysis. We can use technical analysis to find companies that have better or worse returns over a different period of time. This, obviously, for what we want to do here, which is, I want the best of the best in the S&P. Give me the best company in the S&P 500. It's a little trickier to do that than we think, though. So, before we get into comparing against the whole S&P, let's just go to, how do we compare the price of two things. Stock number one, stock number two. We do something called relative strength. Relative strength, in my opinion, is probably the easiest way to compare the price of two securities. What we do is we take the price of thing A and we divide it by the price of thing B. Now you have a ratio. You can check this ratio and see how it changes over time. If the price of thing A goes up, we're going to see that ratio go up. If the price of thing A goes down, we're going to see the ratio go down. It is a great way to track the differences in prices because we can track that ratio over time. This is really, really good. As far as comparing two different stocks against each other, if you want to see how things are changing over time, this is your best bet. It's very easy to see when a stock is gaining or losing strength compared to the other one. But it's not perfect because it's hard to tell sometimes. If you go to a relative strength chart and you look at something like this, it can be a little tricky to find where are the actual points at which you say this is now better or worse value. Well, one way you could do it is it above or below a moving average line? All right, well, is it in a downtrend? It's very easy to tell when you're looking at something like this where it's just a straight line down. It's a little trickier when you have some middle ground like we did back in July where it's not clear where positive trend starts and negative trend ends or any sort of... It's very hard to turn this into logic. You can look at this and get a very just descriptive view. You can use words to explain what this chart is saying, but you can't use numbers. And words can only take you so far. At a certain point, we need those numbers. So we can do this a little bit better by using a different type of chart called point and figure. For the rest of this presentation, I'm going to assume you know what the basics of point and figure are. If you don't, let me give you a quick rundown. We're going to go through the 30-second description of what point and figure is. It is not time series. It does not say each one of these lines is one day. Instead, there is no time element to the left and right. There's not even a time element to the up and down. Time is shown in years down at the bottom and months with the little red numbers. This chart follows trends and direction. Columns of X's are positive trends going up. O's are negative trends going down. And we can say there are two main things that the chart tells us. The direction, which is, are we in descending O's or ascending X's? And then the signal. Is it a buy signal, which is a column of X's above the previous? Or is it a sell signal, a column of O's below the previous? That's all we need to know about point and figure to continue on. So point and figure is a great charting type for relative strength because relative strength puts a lot of focus on that this is greater than this, or it's changing in a direction. Point and figure allows us to forget about time, like if we go back to this chart, it lets us ignore things like July, where there was a whole bunch of barking, but nothing actually happened. And instead, we get to focus on times when a lot did happen, like August or late September and October. Point and figure gets rid of the stuff that we don't care about, which is no movement, and lets us focus instead on times when things do change. So, relative strength can also be plotted on a point and figure chart, with the only difference being we multiply our ratio by 100 to have slightly bigger numbers. A relative strength chart will look almost the same. So if we take, what is this? Technology to XLE, so technology to energy. Now, here's what that chart would look like in point and figure. Still looks crazy, I know, but let's talk about what we're actually looking at here. There are two main pieces of information that we get. That direction. Right now, that direction is negative. Very negative. And then the other one is the signal. Bisignal or cell signal. And in this case, because the most recent thing we have is a column of O's below the previous column, we're in a cell signal. As far as relative strength is concerned, technology, which is the thing that we're looking at, is weaker than energy, the thing we're comparing it to, in short term, because it's in a column of O's. It is also weaker than energy in the long term because it's on a cell signal. If we want to just break it down into a little bit more general terms, short-term strength is what is the direction. Is the direction up in X's or down in O's? Then we have long-term strength, which is the trend. Is it a positive or a negative trend? This is about the best that we'll get for a singular chart. This ignores periods of no movement. Instead, it focuses on major changes or resistance breakouts. Is it a breakdown where we go below? Or is it a breakout where we go above? And how are those changing over time? After you do this a couple of times, you'll start to realize you can do it pretty quickly. SPY XLK. All right, column of X's, and our most recent signal was a buy signal. In 5 seconds, you can read the chart and get short-term and long-term strength. That's the benefit of these charts. But the drawback is pretty obvious. What if I wanted to compare SPY, the S&P 500 ETF, to technology and energy and staples? You can't just do this. It's not going to work. In fact, it did work, but it shouldn't have worked. I think it just ignored staples. Huh. You learn something new every day. Regardless, this is not a usable result. Comparing SPY to technology to staples, you're not going to get anything meaningful out of a singular chart for that. Because relative strength is relative. It has to compare to something. So what you'll end up getting is a very good way to tell the difference between stock A and stock B. But it's not very useful if you want to start adding more. For example, 5 or 10 or 500 different companies. If you want to find a way to compare more than 2 companies at the same time, we need to get a little creative. Or at least we need to find a way to use relative strength charts in a different way. So this is where the matrix comes in. This is where we now get into what Sectors Made Simple started off as, the relative strength matrix. The matrix is our solution to the question, how do I compare more than 2 things at once? What you can do is you can take 3 or more companies and you can run through every combination that you can get them for. So if we had SPY, technology, and staples, it would be SPY to technology, SPY to staples. Then it would be technology to SPY, technology to staples, because SPY to technology is not the same as technology to SPY. Might seem like it, but those charts can be different because ratios scale differently. Then you're going to end up getting a total of 6 different charts for that. Each one of those securities is compared to 2 other things. Once we get all of those charts made, all 6 charts, we can add up the amount of charts, or rather for each of those charts, we can get that short-term direction in a column of X's or a column of O's, and the long-term trend. Is it positive or negative? For our abbreviations, we use P or N. Then we can give them a score. We can say how many charts was SPY in a X count for? How many of the charts had an X? Okay, how many of the charts had a P? And then we can add them up and we get a grade for that specific stock. We have done this for a very long time now, but our approach has been not in 2 companies or 4 companies. It's been in 12 different funds, 12 different ETFs. If I were to show you what that looks like, this is what that data would actually look like in context. What we actually have here is a little crazy, but we can... How did that end up there? I didn't realize that there was a little comparison thing up in the top left. Anyway, what we end up getting is a pretty cool looking picture, but underneath it is a lot of information. Every one of these colored boxes is a single chart. So this box, this NX, is the relative strength chart of SPY to materials, XLB. The next one over is SPY to communications. And again, for all of these, we get those 2 pieces of information. It's short-term direction, X or O. And it's long-term trend, P or N. Then we can add them up. So here we see SPY has a positive trend of 6. So if we were to count up all the P's, 1, 2, 3, 4, 5, 6, that's what we would get. We can do the same thing for X count. We can count up the number of charts that are in column of X's. We end up getting 8. And this gives us a scorecard that we can then sort by what sector has the highest short-term strength, what has the highest long-term strength with positive trend, or what has the highest total of those 2. So positive plus X count. So going into a little bit more detail about what I just showed. This is the matrix. When someone says, what do you do at Sectors Made Simple? I usually say, we make the matrix. It is what we have done for 2 years, and it is what many of our trading strategies and education webinars center around. It's a very useful way to look at what sectors are the strongest, not in terms of last week performance, we do have that, by the way, but in terms of right now strength. Who is the buffest? This lets us find that out. Now, the matrix, again, we don't look at companies here. We're looking at the S&P 500 and the 11 different building blocks that go into it. These different sectors like energy, technology, staples, communications, and more. Every day, We add up all of those charts. 132 different charts are run every day to make the matrix. And with that, we can make some trading strategies. These trading strategies we have talked about since the beginning of Sectors Made Simple, because when you want to start off with the matrix, this is a lot of information. How do you know where to start? Well, we worked on some trading strategies to help you get started using the matrix. But do they work? Yeah, they really do work. There is one strategy that we have talked about quite a bit. If you want to see that strategy in action, please go take a look at our webinar, 3 Ways to Invest in the Matrix in 10 minutes. But in that webinar, I talk about and show the strategy that takes less than 10 minutes every single week to use. And to answer the question, does it work? Yes, it does. In 2020, it outperformed the S&P 500 by 27%. So SPY had a 27% lower annual return than this strategy did. In 2021, our strategy beat SPY by 52.3%. And in 2022, despite how volatile the market has been, our strategy has still consistently outperformed SPY, currently outperforming SPY by a return of 18.9%. And that's 5 minutes a week, 10 minutes a week max, is all it takes to start using the matrix to invest simpler. This isn't magic. This isn't some crazy snake oil thing. This is just, it's an understanding of the market. It's an understanding that relative strength exists for a reason. Not everything will be as strong as each other, and we have to remember the S&P 500 is just another investment. It's like saying that Superman is just another person when he's Clark Kent. SPY is not anything special. It is not some master group of this is the best group of companies you can possibly get. No. There are always sections of SPY doing better or worse than others. Our strategies try to find what that new best thing is about to be. So why does this strategy actually work? Because it looks at point-in-time information. When you go in to trade, you are using information up to date to yesterday's market close. We update the matrix every day after the market closes. So when you're looking at the matrix, you're looking at real current information. And that information is not just who is the leader right now. You can also look at who was the leader and how has that leadership changed. For example, that trading strategy that I was just talking about doesn't use the matrix at all, funny enough. All it does is say, I want the sector that has gained the most strength in the past 2 weeks. That is what I will buy. Of course, there is a little bit more that goes into it than just that, but the root of the strategy is short-term gains matter. Not short-term profit, short-term relative strength gains. This is how a trading strategy can be used. But if you notice, there's a lot more on our website than just this momentum, than just this one simple strategy. Again, this strategy is useful, but does it mean that the rest of the information on the matrix isn't useful? No. Actually, not at all. The remainder of the matrix is still very, very useful and can be used in many different ways. For example, the positive trend, this long-term strength indicator that we have over here, it's really good if you want to find the long-term stable sectors, the ones that are holding on to those long-term trends. It's really good for that. Total count. If you ask me the question, what sector is the market leader right now, today? I'm probably going to go to the matrix. By the way, this is already Friday's matrix. So this is updated to the end of the week. So if you asked me what is the best sector right now, I would probably come to the matrix. I would sort by total count. And I'll be, all right, energy is the best. Healthcare is the second best. The S&P 500 is the third best. Why? Because it has a good balance of long-term and short-term strength. It's gained a lot of strength in terms of momentum compared to 2 weeks ago. That, to me, is the signs of a strong sector. You get the answers to the question of what area should I start looking at very, very quickly. And from here, you can use that answer. What is the top sector? Well, now you know. It could be energy and it could be healthcare. So let's use it. Now you might go to a website that has a stock screener. For example, I'm just going to give the example here of FinViz. You can go here. You can say, all right, I'm only going to look at the S&P 500 index. And I'm only going to look at the energy sector. Cool. My stock search for finding a company that I want to invest in went from 500 companies, if I didn't have the matrix, to 21. All right, now I can actually go in and I can do some fundamentals. You know, you can do your EPS growth quarter over quarter. Now is where you get to develop, if you already have a trading strategy. The matrix does not replace your trading strategy. It can be in addition to your trading strategy because it's just another filter. It's just the answer of what group of companies should I look at if that group of companies is a sector. So if you have a fundamental filter that you like, be a profit maybe, whatever it might be, the sector is just another way of narrowing your search. But the sector matrix, as good as it is, and as much work and time as we've put in to have it be the best it can be, it's still not perfect. Then why the heck are we selling it? Because it's still extremely good. There are trading strategies that use it. It can teach you a lot about the market and what sections of the market are doing well. And it's a really good filter when you're looking at a strategy you already use as a way of narrowing down your search even more. But the biggest problem about the matrix is that it's only sector ETFs. You are relying on turning the S&P 500, 80% of the US stock market, you're turning into 11 things. And those 11 things are not the same size. They're all different sizes. So for a long time, we kept the matrix as the matrix because 132 charts done every single day, that, funny enough, is still a lot of work. If you were to do it by hand, it'd probably take you over an hour. Now, we're not just creating the matrix. Every day we go through and we create these momentum tables and we update the sector ETF charts and all of the relative strength charts. So it's not just 132 charts. There's a lot that has to go on behind the scenes. And because of that, there's a reason that we've limited the matrix to 12 different securities, 12 ETFs. It still gives us a whole picture of the S&P 500, but in a group that is much more manageable for us to do relative strength. Because relative strength does not scale equally. If you're the kind of person that likes math formulas, the scaling for the matrix is x squared minus x, if x is the number of companies. So if you had 20 companies, 20 squared would be 400, minus 20 is 380. So just adding 8 securities makes us go from 132 charts to almost triple at 380 charts. Okay, let's now go a little bit more of an extreme example. 100. 100 companies, 100 squared, 10,000, minus 100, 9,900 charts. So while we increased from 12 to 100, less than 10x, our charts have gone up significantly more than that. We're now at almost 10,000 charts to make a single matrix. You can see how this gets out of hand pretty quickly, because 500, if we wanted to do the whole S&P 500 matrix, where we didn't turn it into sectors, all we did was look at 500 companies on a single matrix. Well, 500 times 500 is 250,000. Minus 500 is a rounding error, but for those keeping track at home, 249,500 charts would be needed to make a single S&P 500 matrix. A little crazy, but we're all a little crazy here at Sectors Made Simple, so we did it. Today, we're happy to announce that 249,500 relative strength charts are soon going to be available to you on the matrix, because our upcoming project is quite literally that. It is going to be a full company compared to company matrix for the S&P 500. With those almost 250,000 charts, we'll be able to get short-term, long-term, and combined strength for every one of the S&P 500 companies. Now, that might seem pretty crazy when you're looking at 12 things here. Is it really going to be 50 times longer and 50 times wider? No, some things are going to have to change. The design's going to be a little bit different, and the way that the information is offered is going to change a little. But that doesn't mean that you're going to lose the information that you want. After all, our goal is never to tell you how to invest. Our goal is to listen to how you want to invest and help give you resources and tools to do so. This project is no exception. Our goal with this matrix is to have it be something that you would want to use and that you would know how to use right away. We want to give you the information that you care about, because what might be useful for you might be useful for others. But what you might find useful is also going to probably be a little different than what I find useful. For me, what I would want to know is, all right, let me filter by sector, but also let me filter by companies already on a buy signal. I'm not looking to add more companies I'm not looking for more companies to add to a watch list. I want to buy something now. What do I buy? So I might want to find things that are currently on buy signals. Maybe you care a little bit less about that, and you want to just know the companies that have the highest total strength in the leading sector. So you want the ability to sort by total count, and you want the ability to sort by sector. Or what if you're Romulo and you want to know where is your company? What is the strength of your company on the matrix? Well, that is the exact examples of things that we want to talk with you all about. We have a pretty good idea of what we want this thing to look like, but we also want to hear from you about what you would want to see it look like. Things like a search bar to search for companies, to see where that company is in that S&P 500 matrix. The ability to see things like companies that are currently on buy signals. All of these are features that we want to add to this matrix and have it not just be a matrix, but we want it to be a matrix and a screener all in one. Now, in the past, when we've created new tools, we have an announcement saying we're working on a new project, here is about when it's going to be released. Then we go back into the little magic black box, and eventually out of the curtains pops a new tool and we say, hey, it's released. Let's have a couple of classes on how to use it. It's great. It's fun, but we want to do something a little different this time. We want to explore what it would be like to have you all be a part of the development process for this tool. And the best way for us to do that is by getting you all, the SMS community, involved. So this is the way that the development of the matrix is going to happen. Our goal is to have this created by the end of October. So that is the target goal that we're working towards. Again, the exact release date is going to depend on how much stuff you all want added to it. But every Tuesday in our members webinars throughout October, I will come to you all and I will share with you all, hey, here is what the spreadsheet looks like. We're going to start developing this in a Google Sheet. So that is something that I can show you all real data and I can go in and play around with it real time with you all. So I can go and I can say, hey, here's what the matrix looks like right now. What would you all want to see added? All right. Maybe you're interested in having this be, instead of having positive X count in total, you would want to have it be the percent out of 500. So we could make it, okay, what if we had it like this? So now we have percent positive, percent X, and percent total. We can do that. And we can do that live together in a webinar. If you have an idea, it's very easy for us to go into a Google Sheet with all of this data and say, let's try it out. Let's see how we like it. Or another way we could do it, instead of saying compared to 500, what if we just said, all right, I want to see how the strength of this company compares to the largest company in the list. We can do that too. There is no end to the amount of ways that we can turn this data into a tool. So we want to share that process with you all. So every Tuesday in our members webinars, we will cover what did we change last week, and then talk together about what are the things that we would want added. What can we add? What might be something we can do in the future? And also, sadly, what we can't do. There are going to be things that we cannot add to this. But the best part about where it's at right now, we know what we want this tool to be. But we want you to help decorate it. We've got the nice car all made and we can put out and develop the car and send it out to you. But we want to know, what colors of paint do you want? Do you want to have it be like a VW Bug that has a little flower pot inside of the car? I kid you not, most Beetles do have a little flower pot or a little place that you can put a flower in the front of the car. Or do you want the headlights to look a certain kind of way? All of these are things that we will get to work on together. And after the tool's done, all of the bells and whistles are put on the car, and it's out the door ready for Sectors Made Simple subscribers to use. We're going to have some webinars that will talk about how we can use those tools. So I will be working together with my mom, Julie Stav, to put together a webinar series where we will take this new S&P 500 matrix, we'll take it on a test drive, and show some different ways that we can run it around the track. These methods will turn this matrix into a stock screener, a fully functioning stock screener. We will work on creating trading strategies using this matrix and many, many more. This is the kind of project that we have wanted to do for a very long time, but couldn't do because 250,000 charts is over 1,000 times more than what we do right now to create the matrix. Thanks to developments that our developer Nate has made, this is now something we can offer. And we are super excited to be able to bring it to you all, which is why before it's even completed, we want to bring you all in to share this journey together and help you to have your voice be heard about what you would want to see on this. Now, there's only one last thing for us to cover before I'll answer some questions before we end today's webinar. Who will have access to this matrix? Well, the great answer is, if you are a Sectors Made Simple subscriber, you will have access to it. There will not be an additional cost or another tier of subscription that does get it and others don't. Any Sectors Made Simple subscriber will have access to the S&P 500 matrix through the dashboard. So just right now, as you see matrix and momentum, it would be another little tab, S&P 500 matrix. If you have a Sectors Made Simple subscription, you will, as soon as it's released, have access to the tool. If you are not a Sectors Made Simple subscriber, you're watching this and you want in either on the development if it's still in October of 2022, or if you want to join and start using the tool for yourself. Any Sectors Made Simple subscription that you purchase will get you access to this, as well as all of the other tools that are available on our dashboard, including the S&P sector ETFs matrix, the sector ETF prices and BPIs, and the backtesting engine, which is how I can tell you how well that strategy has performed in the past. All of that is included with your Sectors Made Simple subscription, in addition to over 100 hours of webinar content available on our website. So, that's what we have coming up. It's going to be an amazing October working with all of the Sectors Made Simple subscribers to help have their voices be turned into a tool that they can use, we can use, and also you can use. So, with that, I leave you. If you have any questions, concerns, comments, or if you want to purchase a subscription and run into any trouble, you can always email us at support@sectorsmadesimple.com. We are always available to help you out with whatever you need. Now, before we end today's webinar, I want to see if there's anyone in the live chat that has any questions or anything that they want answered for this project. Kike, so who was the closest to the secret? A lot of people were thinking it was a really big custom matrix. I had a bunch of answers of people thinking that it was custom matrices over 7 companies. That is also something that we can look at. We can look at expanding that in the future. But short term, this is going to be the big project we're working on. I think 2 people hit the nail right on the head. They said it's a S&P 500 matrix. So 2 people nailed it. Most of people were very, very close. And I'll tell you this I'm not just saying this. Every single idea that someone had is something that we're either wanting to work on next or already working on, but we're not ready to talk about just yet. So if you had an idea, if you sent through an answer to what you thought the teaser that we sent out was, know that your answer was either correct, very close, or somewhere in the development, hopefully coming to a matrix near you soon. Erica's saying, accommodate industries. Si es posible para hacer esto, pero Industrias es una cosa difícil para obtener porque um, cada, cada acción tiene muchas industrias, pero solamente un sector. Necesitamos encontrar ah, un proceso para obtener solamente una industria o un sector para cada compañía y um, afuera del S&P 500 es más difícil para obtener estas industrias porque no tenemos ETFs como XLE o algo para cada sector. Necesitamos hacer el trabajo de qué es el sector de esta compañía manualmente. Pero sí, estamos trabajando ahora para obtener esto. Y podemos hacer un matrix en el futuro con esta información. Just to kind of reiterate what I was saying, the question was, can we have industries on this sheet? We can. With the S&P 500, it's pretty easy. The minute we start getting out of the S&P, it's very difficult because we don't have clear XLE or XLK kind of distinctions outside of the S&P 500. So it's going to be a manual process to find industries and sectors to match up with all of the companies, but that is something that we are actively working on. I'm not just saying this like, oh, we'll work on it soon. That is literally something that I have a spreadsheet on my computer right now of some different data sources that we have access to and how they match up all these sectors and industries. So that is something we are really actually working on. Are there any other questions that you all have for me about this project, about how the classes are going to work, about Sectors Made Simple as a whole? Again, I am here to help answer any questions that you might have. And again, if you're watching this recorded, that email is not some support group that we have. That email is quite literally me, my wife Kira, and sometimes our cat Cleo when she decides that she wants to be helpful. Yeah, you freeloader. We're going to put you to work, you know that? Okay, Melly. All right, I think that there are no questions. So I will leave you all with this excitement about what is coming next. Sectors Made Simple subscribers, if you still want more about what we have planned for this, and I hope you do, come on Tuesday. It is going to be our first session where we will get to talk about all of this project. I will show you the first steps of the development that we have and how we will go throughout October to turn this from what is quite literally just a single spreadsheet on my computer right now into an advanced tool that we can use to understand the market in a much more detailed way that not just is new for Sectors Made Simple, but is something that very few, if any other places offer. This is new information that we are proud to be able to bring you all to help you and us invest simpler. So, thank you all so much. Take care. We'll see you all very soon.